is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Hey, thanks for joining. Here comes Sean McKee.
Yeah, no problem. How are you?
Oh, doing good, doing good. I think we got Sean coming as well. Sean, thanks for joining us.
Yes, hello.
Yes, good to catch up with you guys. Wanted to learn more about what you're doing and glad to tell you about 10 Capital.
Yeah, nice to meet you.
Nice to meet you guys as well. Where are you guys based?
Chicago area.
Chicago. Oh, great. We're actually coming up there tomorrow, Wednesday, for our pitch session at Perkins Coie. So it should be good.
What about you? Where are you located?
We're in Austin, Texas.
Okay.
So it's nice and warm here right now. But anyway, yeah, we've been helping companies raise funding since 2009 under the name Texas Entrepreneurs Network, originally, now 10 Capital. But at heart, what we're doing is an investor relations introductions program. Take your deck, go out to our network, build a list of interested investors, and then have them hear you pitch in our online events, our in-person roadshow events. That's where Chicago be in person. And then dinner events. We find dinner is a great way to close investors after you talk to them. Zoom's easy to open, but hard to close online for sure.
Yeah, that's nice. So have you sent how is your name Hall? Sorry, excuse me. Sorry. Is
I
that
haven't
how
got much information about you guys, but looking forward to learn more.
Yeah, I sent you our pitch deck and the video and website and product video last week.
Let's see where that is in here. Oh, yeah, the links. I got the links. That's right. For the YouTube and the other ones. So I got that part for sure. Yeah. Thanks for doing that. How do you know Johan?
We have been engaging his companies for almost a year now, and he's been, helping us to get into retail outlets and connecting us with some interesting people that have been helping us out with marketing.
Ah, okay. Great. That's good to hear. Cool. Well, yeah. So how's the fundraise going for you guys?
we just started?
So this is just the start. As I mentioned in the email, that Hafi, the CEO, has seeded this company on his own to a little over $2 million. And so we're just, so we just launched the product. We had it at CES. We got some feedback from people, and so we've done some updates, and now we're ready to, take it to the next level with marketing and advertising, et cetera. Also, we have a couple other products in the pipeline.
All right. Cool. And so what kind of valuation are you putting on the fundraise?
I mean, it's about $50 million, over $50 million.
Okay. And what kind of revenue do you have so far?
We just started selling, so we don't have much data for the sales yet. But we have been getting to some retailers, and they have started to place orders, and we have started selling on our website. And we plan to start selling on Amazon in about 1 or 2 weeks, and also some other retailers.
Okay. All right. It makes sense. Is the revenue recurring or no?
It's a one-time sale, but there are going to be some services that can be recurring too, besides just the product. So you haven't looked at the pitch deck yet then?
No, it came with a Microsoft Exchange link that I didn't have access to, so hadn't been able to get there. Watch the video, so I got a sense of how it works and so forth. It looked like a cool design, and it looks like it's pretty slick there.
Let me get you the pitch deck. I thought the link should have taken you to a OneDrive link.
Yeah, it wants me to log in and all that, so I don't have a login for that. So
okay, let me get that to you right now. But so, besides selling the controller, we're going to be, for smart devices, we're going to be bundling it with other manufacturers' products as well. And we've got several markets, besides the consumer market, we're going to builders and, apartment complex multifamily units that are, looking to add smart control access as well. And I'm just looking for your email. Here we go. All right, I'm going to get you the deck. That's actually good that found out that you need to log in on that, because we got to just make this easy to get.
Yeah. We use shareable files too, but even with Google Drive, you're all the time sending access and updates and stuff. So there's DocuSend as well that some people use, although I think some people fear putting their email in there so you don't get quite the use that you want out of it, because people don't want people knowing what I'm doing or something. I don't know. I don't have a problem with that, but others do.
Yeah, I think there was an option to share without needing them to log in.
So,
All right. Well, either way, it's coming your way right now.
okay, sounds good. So what's your channel to market? How do you plan to get it out there in a big way?
Through retail
Okay.
and, with advertising,
Like Best Buy and Walmart and those places or something else?
all those.
Okay. The big
Yeah,
boxes.
Target.
Okay.
Yeah, and that's what we're working with Johan on. We've actually just signed a contract with a distributor and a rep firm, and so we should be meeting with Best Buy corporate this sometime this month, as well as Target.
Have you had any validation with customers of any kind? Anybody tested, try it out at a beta level or have some sense of what it looks like and had good ratings and reviews out of it of any kind?
Yeah, we've had a number of good reviews.
Okay. And that's one of the key things there is they're always want to make sure that somebody's using it. And if they pay for it, it helps. It didn't sound like people paid for it yet on this one. So $50 million valuation is always kind of tough on a pre-revenue deal unless you've got something that says, yeah, it does really work great.
Yeah, we've got reviews from some of the top tech websites and people that have actually bought it.
Okay, so they have bought it then. Okay, so
Yep. I mean, it's for sale now, but we need to raise the advertising budget and go big on it.
right. No, I'm just looking to say that somebody bought it and they're happy with it. So that's market validation and product validation. You don't have to sell a lot. You just have to sell to somebody. It sounds like you have,
Right.
which
Right.
helps a lot. But what else do you want to tell me about this deal so far?
Well, we have many unique advantage over competitors. Like we have worked with a lot of, major industry companies for the smart home. Like from the Shade, we work with Hunter Douglas. With a smart switch, we work with TP-Link for the Casa Tapo. For the smart light, we work with Wiz. And then we have good partnership with SmartThings. Smart lock, we support Schlage, Yale, August. And that's very unique for the smart home controller market. I would say we are the only one that support those integrations in the market. And we have those partners are willing to do many programs to promote our product and their product. Like we have a coupon program that those manufacturers can give our customer a coupon code to buy their product. So we are kind of not just a smart home controller, but a platform. So when the customer buy controllers, but they can get $400, $500 coupon deal from our partners to buy the smart lock, shade, light, and get a lot more value than just a controller. And the controllers support Bluetooth controller mode, means when you get a controller, you can just easily pair to your phones or computers to control the presentations or media player or cameras, which no other competitors is able to do that. So we got a lot of unique selling point for this product and a business model that no competitors doing. So we believe it's going to be a huge success with the fundraise and get those programs going.
So you're raising $6 million. Have you thought about breaking that down into rounds or tranches?
That's possible. I mean, the immediate need is about, I would say about 3 million or something, around $3 million. And we need more, to catch up the marketing and sales effort. But if we can discuss, get an initial few $1 million and then increase to get up to 6.
So one of the strategy we use is a ladder strategy. And what we do is take a $6 million and break it down into a $1 million raise, followed by a $2 million raise, followed by a $3 million. And the $1 million on a low valuation, like $10 million, something like that. Very attractive. Everybody wants that because that's the low price money. And then the $2 million is at a $15 million valuation. You go by 50%. The third tranche is, a $25 million valuation. And you show the $6 million number. And so that tells people we're raising enough to get to where we want to go. If you're just raising $1 million, you're not going to get to the number you want to get to. And they know that. But if they see 6, well, then they know it's there. But you don't need all 6 in one go. You need a piece at a time. And by starting low, you give people a reason to come in early. And you want to make the first one an easy raise because it's the hard one. It's people, everybody's going first, and if they're going to go first, they want something for it, and they want a good price on it, a good valuation. And then you signal that there's only so much of that. There's some scarcity here. When that 1 million is up, we're going to the next 2 million. The valuation is going up, and you do have to hit milestones along the way. We had to hit certain revenue targets and get certain product things done with $1 million. That's why it's small, is that we don't have to, we're not setting the bar very high. If I raise $3 million, people are going to expect a lot for your $3 million, and that can be tough in the early days. So $1 million is a low bar, and it's a low price, but then now we go to 2 million, and we're stepping our game up, and then finally you step up to 3 million. One of the advantages is it breaks the round down into manageable pieces where we get 2/3 of the way through. We're at 700K out of $1 million. We declare we're closing in 6 weeks. Who wants to be in? You start driving people through it so you can manage it. If I'm raising $6 million and I have 700K, I can't declare I'm closing in 6 weeks. It's just too far a distance to get to the end of the 6. That's why I like the $1 million, is that it's easy to make it smaller, so I can just basically say we're closing this one and move on. And you do have to put an effort into closing to get money in today's market. We go after individual angels first. We go after high net worth second, and family offices third. VCs really don't come in until you get to $1 million of revenue. So they're part of the second or third tranche, but they're probably not going to be the first one. And we're usually on a convertible note or safe note, raising money at this thing. So one thing we do is probably make that first valuation very friendly, just to get people in the door. Because once that first tranche is closed, you have a track record for closing money. Now people can see, oh, if they've already closed money, other people are in the deal. That sends a big signal to the market. So the second and third become easier, even though it's higher value. It's easier because there's other people in the deal. So that's what we do in our program, is try to put a strategy on it like that. But at heart, what 10 Capital does is an investor relations program. We take your deck, go out to our network, build an introductory mailer, send it out to the list, and build a list of interested people. And you'll get a range of VC, family offices, everybody coming in, clicking on the intro button, the follow button, and other things, trying to figure out, what they want to do with it. And then we invite those guys to come in and hear you pitching our online events up front. And then we want to go to our in-person roadshow events in the second month. And so we want to, for example, we'll be in Chicago in 2 days, and we'll have 50 investors in the room. We'll be downtown pitching to a room full of people. If you guys want to check out our events page, you're welcome to come down and watch the presentations and see what it's all about. And then after we do the in-person roadshow and we've done the online, we then say, well, where did the interest come from? So if you went to the Chicago one and got 20 investors looking at your deal, a month later, we're going back to Chicago, and we're trying to close those guys with a dinner event. Like I say, it's hard in the Zoom world to close with email and close online. You have to get in person in many ways to pick up the check. But our angels write 50K checks, our high net worths write 100, our family offices write 250, and our VCs write 150 to 500. But like I say, you don't see too many VCs at this stage. You'll see them later. But that's what we do, is we're at heart helping you raise funding for your deal. We're a $3K a month retainer for a 3-month commitment. It takes 3 months to do a cycle on a group of investors and do this whole thing. And then after that, it goes month to month. So if you got all your money in the first 3 months, you wouldn't have to. You could step out of the program if you want, go work on the business, and then raise the second tranche later. Or you can just keep going. I've had people in the program 2.5 years, because when they finished their pre-seed, they did their seed, and then Series Plus, Series A, and they just never stopped raising for the 2.5 years they were in the program. And they just took the investors from one cohort into the next one. So that's kind of how we work and what we do. What questions did you have for me?
Okay, so you're going to do it like 3 steps. The first round is just you suggest raise $1 million. So do we tell investors we plan to invest 6 million total, and then 1 million, 2 million, 3 million?
That's right. You want to show the overall structure, because if you're launching this program and you're only going to raise $1 million, they're really going to wonder how you're going to hit your revenue target. $1 million isn't going to get you there. But what we really are raising is 6 million. So you do want to put the bigger number up there. But angels don't like the idea of starting down the path of a $6 million raise. They like the more of a $1 million, $2 million raise, because they think you can get to the end game there and go and start deploying the capital and, doing good things with it. And then later stage, you'll get high net worth and family offices to come in on the later stages.
Okay, so do we give them any commitment? Like, what triggers the next $2 million?
when you finish the $1 million raise, that's when you go to the $2 million raise. So you have to finish the round. If I still have, I get 800K out of $1 million, I really need to raise the other 200 on that valuation before I go to the next round. But when that $1 million is covered, well, then that's taken care of. That's off the table. The next step is to go to the $2 million raise, but now we're at a $15 million valuation. And you want to make sure that you're doing things, hitting milestones that justify that valuation. A $50 million valuation for a very small revenue company is going to be a hard sell. That's why I like the idea of taking the first million, putting it down around 10 or something like that. You can decide what those three numbers are, 10, 15, 25 or whatever. But market rate today is, even if it's all recurring revenue, is around 8x revenue. It's not, used to be 10, but this market's a bit tough. But over time, the market will get better. One thing you have going for you is that the stock market is continuing to go up and to the right and, hit all-time highs. And that's how a lot of investors pay for early stage investments, is they cash out stock is what they're doing. And they've got a good opportunity right now to cash it out at a good price.
So it's going to be $3,000 for the first 3 months?
$3K per month. So it's $9 for a 3-month commitment. And then after that, it goes month to month. I have people coming in where they only have $500K left and they get that done in 3 months. I have other people that are raising $6 million. They're just starting. They're going to need more than 3 months. They're going to need more like 6, 7, 9 months in some cases, given how much they're trying to raise. But in my case, you really don't have to raise all of it through us. You can raise the first round through us and then go work on it yourself or use a service or whatever you want to do to raise the next 2 million. Some people, when they finish the raise 1, they go to raise 2 the very next day. Others, they take 3 months off and they go work on the business. Even though you have these 3 rounds, you don't have to raise continually. You can stop and work on the business if you want. It's up to you. I would, if I'm going after $1 million raise, I'd stay with it till I get the $1 million in the door. I'd try to get that done as soon as you can, because you got people there. Most cases we're on convertible notes and safe notes, so it's a rolling close. They sign the check, you sign the note, the money goes into the business the next day. And that can be very helpful in this case.
Okay. So do you more suggest the notes instead of the investment at this stage?
Well, the challenge with a price round is that investors will agree to it if an investor has put money in on that price round, and good money, not just 25K, but like 250K. So if you have a lead investor that priced it and put money in at $50 million, well, then that should stand up. But in most cases, people don't have that. They've got, 225K checks, and that's really not a big number. And then they look for a diligence report. And so at the first round, it rarely goes to a price round. It's usually done on a convertible note or a post money safe, because you're not setting the valuation, you're just setting a valuation cap. So that's what we're doing, is just setting the cap, and we're going to figure out the exact valuation later.
Since you haven't had a chance to look at the deck, do you guys sort of, take our deck and the pro forma and all that and help shape it to make it, as attractive as possible?
Yeah, we often are putting in new design on it. We're putting in missing slides for the upfront intro mailer. I find most decks are good enough for the intro mailer, but for the pitch, we're out in front of investors, and what we're looking for is the 15-minute pitch and answer questions. So kind of with a 9-minute version of the pitch and 6-minute for questions from the panels that we have out there. We have 3, 4, 5 investors on each panel asking questions. So that's what we're looking for. And we do help with the strategy as well as the deck and the documents. So ultimately, you need a deck, a term sheet, and a data room. Up front, we just need the deck. Later, we'll get to the actual term sheet. And then finally, after a month or two, we'll need the data room when investors get to the place where they're doing diligence and need to go look at it. We have a checklist of documents you put into it. In early stage companies, there's not that many, 10, 15 documents in most cases. If you've been around for a long time, well, then maybe you have tax returns and other things that you need to put out there. But typically, early stage companies don't have lawsuits and other things that really require a lot of documentation. We're looking at cap table, income statement, balance sheet, 5-year forecast, use of funds, that type of thing is what we're looking for.
Separate from now, is that included in the deck then? Or those are separate?
The data room is separate. These are documents. You say you have a Delaware C, they want to see a document that says we are a Delaware C corporation. They just want validation behind it. If you have patents, well, here's a list of the patents and where they are. They're provisionals, they're designed, the utility, they're filed, they're awarded, whatever the status is in there as well. Cap table, who owns how much by percentage, very high level stuff as well. Income statement, balance sheet, they're looking at the income statement to see what kind of revenue we have. We have had revenue. And balance sheet, they're looking for absence or presence of debt. We don't have any debt, or we have 25K of debt or whatever that might be, just to know what's there is what they're doing.
Do they sign NDAs?
Some do. If you want to see the actual secret sauce, my approach to the NDA is you have a 2-box data room solution. The first one is all the general stuff you can find online anyway, and anybody that wants a data room, here it is. And for more than half the people, that's usually enough. I check mark my documents off of it. And then for those who really want to see the secret sauce, and where it often gets sensitive, is customer information and customer contact details. And you can sign an NDA for that and make that available to people. But you're in there very close with them, working with them on this. You know what they're doing and trying to do with it. And that's the thing you want to be in control of. So the 2-box solution works pretty well in most cases, where most people are happy with the first box and you don't have to spend much time. Some people really need to talk to that customer, and you set the rules of engagement. You will talk to them, but I will be on the line with you, something like that. So we're not just letting people run wild with our customers. That's the part I find more sensitive than anything else.
Do you have like options to, instead of paying the monthly fee, to get a percentage from the fund raised?
You have to be a broker dealer to take a success fee like that. And my background is I started 3 angel networks, had a big network of angel groups and VC funds, and they don't let brokers in the deal. You have to be, if you're a broker, you're not going to be able to use angel groups or VC funds, and we make extensive use of both of those. And so then I don't have a FINRA license, so I just can't do that. So just like an attorney is actually building your documents for you for investment, or your fractional CFO is building your financial forecasts, and it's just fee for service. That's what we're doing. We're doing all the mailers. We're doing all of the upfront work. We're doing the redesign of the deck. We're making the introductions. We're setting up the events. We're just doing all the back office work that you could do if you wanted to, but most people rather work on their business than do the actual fundraise. And so that's what we are, just a fee for service.
So how do you, reach out to the investors? Do you check our pitch deck and see which investor feeds and then send to them, or send to all the investors?
Well, upfront, when we create the intro mailer, we go out to pretty much the broad base of our network. You never know where the interest is going to come back. And we always find interesting new people that are interested in these deals. But once we have it come back, we then share with you all the results on a spreadsheet, and we sort them. Angels at the top, angel groups next, high net worth, family office, because that's kind of the order in which they close. And we just start working our way through those angels is what we're doing. And then we're going out to the different events and different pitch sessions and seeing where the interest comes back, who's expressing interest in this. Because sometimes you do get VCs coming in early. That is just the right thing they're looking for. So when somebody says they're interested, we make an email introduction, you pick up the dialogue, you start talking to them and carrying forward to close from there. But what I can do is send you an email about how we work, and then send you a campaign proposal probably tomorrow at this time. And then you guys can decide if you want to join or not. If you want to join, you put in the first payment. We'll have an onboarding call the next day, and then we'll work to get the intro mailer out in 1 week. Like I say, in most cases, we can use the deck as is inside the mailer because people are just scanning it a little bit. But if we need to, we can have our designer start working on it to get you, by the time you get ready to pitch, you've got the new deck there to work with as well. So we can do that.
You can, take a look at the deck, and what we sent, and then let us know, what you think it might need.
Yeah, I got the deck here, so I'll give it a look, and something we can work on as well to see what we can do to get you guys ready for it. You'll have someone dedicated to the mailers that we do named Sam, and then we'll have someone dedicated to the events, Dave, and they'll help you with all those elements as you go through it. So it should be a straightforward process. There's 7 of us in the company. I do the progress reviews, so it's not like a huge group that you have to deal with in this case. Got the deck here. Overall, it looks pretty good already. It's a little wordy. We need to reduce the word count. In a pitch situation, what happens is people get, they feel obligated to read whatever you put up there. If you have too many words, they start to ignore you and start trying to read as fast as they can before it goes away. So we would need to probably do a little bit of work on that. But overall, the design's not too bad in this case, and we can probably find a few missing slides that we need to put in there as well. Okay.
good.
Well, I'll send that information over, guys. Is there any other questions for me?
I think that's it for right now.
Okay. I'll send the information for now and let me know next steps for you guys and we'll go from there.
Okay,
Thanks,
sounds
sir.
good.
All right.
Thank
Thanks so
you.
much. Have a good one.
Take care.
Bye.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.